Hi, and welcome to this week's Ask Amy. Today we are talking about flood insurance. It's important any time of year, but right at the start of hurricane season, it's definitely important. Joining me is Leash Yu. He is the owner of Yu Agency. You guys sell flood insurance.
We do. Yes, we do.
And you have a lot of knowledge. That's why I wanted you to come on and talk about flood insurance. I think it's sticker shock every year when we get, if you have flood insurance from FEMA through the National Flood Insurance Program, you get these premiums, and every single year they're up. And it's like, okay, we kind of expect that to some extent, but it's frustrating.
Yeah. And so for years and years, FEMA's rates, they went up, but it wasn't that drastic of an increase. And it wasn't until October of 2021 when people started getting these really big increases and wondering what the heck is going on. And so, but yeah, we were definitely getting increases. But after the FEMA changed their rating system, that's when people really started taking notice.
And I feel so many things got lost in those months of the pandemic, years of the pandemic. And this is one of those things that happened. It was basically a big overhaul of how they figure out who owes what for premiums.
Yeah, it's a huge overhaul. And really, we started talking about this in 2019 because the first target date for FEMA to overhaul their rating system was supposed to happen in 2020. But software issues, glitches, the pandemic, things just got pushed back. And it actually ended up happening in 2021 versus 2020. But it was a major, major overhaul. The FEMA, the National Flood Insurance Program, has been in place since the 70s. And they haven't changed a thing in how they rated the flood insurance system since the 70s.
Wow.
And so when this new system came out, it was supposed to be revolutionary, more fair across the board, much easier to rate. But it was definitely sticker shock to most of Southeast Houston.
Yeah. So basically, before, when you look to buy a home, I've always been told, and growing up in Houston, it's like you don't want to buy in a floodplain or an area that has flooded or is likely to flood because it's next to a bayou. And you could expect that if you purchased a house in a floodplain or one of those zones, that it's going to cost you a lot more money. One, you probably be required to buy flood insurance, and two, it's going to cost you a lot more than if you just avoided those areas that are high risk.
Yeah, it was. I mean, before it was pretty intuitive. If FEMA and Harris County Flood Control District, they came up with these maps, and you were either high risk, moderate, or lower risk. And if you were in high risk, the lenders required you to have flood insurance because you're high risk. You're deemed high risk because they think the area is going to flood. And so just intuitively, you think, hey, I'm going to buy a house in this high risk zone. I'm just going to assume my flood insurance is going to be higher than if I bought in the lower risk zones. And so that has totally changed because if you look at the maps and the research that we did, there are areas where it's low to moderate risk that are paying more than those people that are in the high risk zones and in the homes that have flooded before. So it's kind of crazy what's happened. But some of it is understandable, but a lot of times you're just left scratching your head with what's going on here.
Yeah. So you mentioned this study that you did, and I want to talk about that. But first I want to ask, so, okay, if we're not just looking at, this person's right next to a bayou or this person's in an area that is high risk, then this new rating system, what are they looking at to determine how much I have to pay?
Yeah. So the old rating risk zones, it was basically based on, the old way that they rated flood insurance were basically on two things: what zone you lived in, and if you were in the high-risk flood zones, it looked at the elevation of your home. These days, they still look at the elevation of your home, but they're looking at the area that you're living in and how often the area floods, so the flood frequency of the area. They're also looking for what type of floods the area will experience. I mean, is it river overflow? Is it storm surge? Is it coastal erosion? Is it heavy rainfall? Then they're looking at the distance to a water source. How close are you to Clear Lake? How close are you to the Gulf of Mexico? How close are you to a bayou or a reservoir that may overflow?
Those things seem to make sense.
Yes, those things seem to make sense. That one bullet point definitely seems to make sense. But then they threw another one in. It's the cost to rebuild your house. And so does it cost $2 million to rebuild your home or $250,000 to rebuild your home? In the study that we did, it showed that the higher income or higher valued areas were paying a little bit more, or sometimes a lot of bit more for flood insurance, even though they were not prone to flood, you know.
So, and then if you're watching this and you don't know this, or maybe you need a reminder, it doesn't matter. So if I lose my house and I have a $200,000 home or a $250,000 home, and say you lose your home and you have a $2 million home, neither one of us are going to get any more than $250,000. That's the maximum payout.
Maximum payout on FEMA's flood policy is $250,000 for the dwelling and $100,000 for your contents. So if you lived in a $250,000 home and fully lost it, you would get a $250,000 check from FEMA. If you lived in a $2 million home and fully lost it, you would still get a $250,000 check. But you're in this new system, in theory, you're supposed to pay more if you live in a $2 million home versus a $250,000 home. Very strange.
Yeah, and so people hear that and they think, well, that doesn't make any sense. Like, why do I have to pay more if I'm not getting any more money? And you said, well, there's sort of, is this your theory or
Totally my theory. I'm sure FEMA has their scientific approach to as to why somebody that lives in a $2 million home should pay more than somebody that lives in a $250,000 home. But to me, the theory is that their thought is they can afford to pay more, so they're going to have them pay more. Like
spread out the pain.
Yeah.
If you can afford to own a $2 million home, then you can probably afford higher insurance premiums.
That is correct. So that is my theory, and hopefully I don't get in trouble for spreading that theory.
I mean, I think it's one way to explain it. So the other thing, when you mentioned this study that you did with your agency, is so these new rates took effect in October of 2021.
Correct. Yeah.
So you were able to get quotes to figure out how much premiums would cost certain addresses before the new rates took effect.
Yeah, so we did this big study. I mean, I say big. There was 110 addresses that we did, and if you multiply it by 10 minutes per quote per address, it was a lot of time that my folks put into this study. But before October 21st, 2021, we tried to figure out what the differences were going to be. And the differences in the areas in which we operate, but pretty much the greater Houston area, mostly inner loop areas. But we try to figure out if we were going to experience a decrease, increase, or if everything was going to be flat. But what we found was pretty astonishing, and that this more fair system, it might be more fair to people that live in Kansas City, but it was definitely not more fair for those that live in Houston, especially the greater Houston area.
Yeah, I found it fascinating because you guys went sort of neighborhood by neighborhood and can tell on average how much rates went up. I want to talk more about that when we come back. We're going to take a quick break. But we can talk about maybe at least in Southeast Texas, who seemed to fare better than others.
Yeah.
And then, it's really interesting. We'll be right back, and we're going to share a lot of those details. Welcome back to this episode of Ask Amy, all about flood insurance. My guest today is Leash Yu, talking to us about this really interesting study that you all did. I mean, this is research, basically.
Yeah.
And so it took you guys a little while because first you tell me what you did. I'll let you explain it.
Yeah. So my staff, Selena and Kara primarily, and Frazier, they took all of these addresses that we had identified, mainly clients of ours, and we just started trying to figure out what was going to happen with the flood rates. And we live in our office is in West Yu, and I live in West Yu, and so I was particularly interested in the West Yu area. In my home, so the very first address I did was obviously my house. In my house, I live on a street that doesn't hold water. It didn't flood during Harvey. It didn't flood during Tax Day, Memorial Day. It hasn't. I mean, it's never even gotten close. I'm in the 500-year flood zone, and my rate was $572 a year prior to October 1st of 2021. $572, and I was happy paying that. And so when I ran the rates on my house, and I found out that the new FEMA rate has me at $2,200 a year.
$2,200.
Obviously, I freaked out. I was like, "Holy cow!" I mean, that's a lot of money. And I know the flooding history of my house. I've lived through it all. Our house was like a sanctuary for a lot of people that did flood in other neighborhoods during Harvey. And so when I looked at that, I'm thinking, okay, so if I were to sell my house today and I listed it on the market, I know the flood history of my home, but those people that are coming in to buy my house, they say they're coming in from California or Oklahoma, and they run a flood insurance quote, and it's $2,200. What are they thinking? I mean, in their mind, they're just going, "Oh my gosh, that house is going to flood," or FEMA thinks it's going to flood.
Yeah.
And so it was particularly interesting. So that study. So the West University area, in the addresses that we ran, increased about 190%.
Wow.
From the prior to risk rating 2.0, which is what FEMA is calling this new transformational rating system, to after risk rating 2.0. And so, in Southside Place, Southside is in the high risk flood zone, but the houses don't flood in Southside. If you know anything about Southside Place, they built it up so the houses don't flood. The streets flood, but the houses don't flood. But the average house in Southside is now $3,300. And so it was just a crazy situation with what was happening in West U. And you go further down south in Brace Heights. Brace Heights got inundated during Allison, right? But one of the greatest things that happened in Brace Heights, because a lot of the new construction that came out, but everybody built high in Brace Heights. But Brace Heights still got a 175% increase. Now their rates started off higher, but their increases were higher, just as high as the West U area. So we went through all the neighborhoods, and so Meyerland during Harvey got inundated. Right. So poor Meyerland, but Meyerland, they didn't get that big of an increase. So Meyerland's increase that we saw was about 130%. Versus West U's 190%. Yeah. And so some of the homes in Meyerland that did flood, they actually got reduced premiums, which really surprised me. Right.
And how do you, it almost seems like this sort of mystery box.
Yeah, we were scratching our heads going, what is going on with this?
Yeah.
And so then we would rerun the numbers because we're like, is this accurate? And we were worried that the software and the rating systems weren't up yet and correct yet. But the longer we go into this, the more the better we feel about the numbers we did prior to October of 2021, because they seem to be pretty accurate and they seem to be holding. The increases seem to be holding.
Yeah. So before we compare, because you go zip code by zip code on which areas got the biggest increase, just want to explain to people that, okay, so you're talking about 190% increase, but the people in West University won't have to realize that increase all at once.
Yeah, and that's the kind of the good news. And we talked about this earlier, that FEMA actually has a term for not experiencing the increase all at once. So if you have flood insurance already, you don't have to go from $572 a year to $2,200 a year. FEMA's term to allow you to glide into the new rate, they call it glide path. And so instead of experiencing that increase all at once, every year FEMA has a maximum that they can increase their flood insurance rates, and that's 18%. So they can increase your rates by 18% a year until you get to that new rate. So for my situation, it was 8 to 9 years before I got to $2,200. So it's basically 8 to 9 years of me, delaying the inevitable.
Right. And it also seems like we're supposed to be happy about 18%.
Yeah.
Like on any other bill, when it's 18% more, you're like, wow, that's a huge increase.
Huge increase. I was an exclusive insurance agent for Nationwide Insurance 13 years out of my career. And Nationwide knew exactly when their clients would leave when they did rate increases, and that increase was a single digit number. It was like 8.2%. I don't remember what it was, but they were true. Once it got to 8.3 or 8.5%, my clients would leave without even calling us. Right. So now at 18%. It's unapologetically, hey, we're going to raise your rate. It's 18% until you get to that new rate, but it is what it is.
But then let's talk about that. This glide path, as long as you have insurance, they're not going to slam you all at once with a 190% increase, just 18% each year. But if you were to do what you said and say, I can't pay that, and you decide to leave this year because money's tight and you'll maybe, if I'm doing better next year, I'll go back. What happens?
Yeah. So if you say I'm not going to renew my flood insurance this year at $572 or it's $700, whatever your new rate is, as soon as you cancel it and you want to try to buy it back, you have to go immediately to the new rating system in the new rate. Yeah. And for me, that's a really bad thing. Some areas like in the Heights, the folks in the Heights didn't get hit that hard in 77007 and 77008 in the Heights. But in the West U area, the Bel Air area, the other areas, you can get hit pretty hard. River Oaks,
right?
In those areas, you'll get hit pretty hard if you cancel, or if you're buying a new house and you need a new flood insurance policy. The new rate is effective immediately. Yeah.
So you kind of after we did the first interview with you, and you kind of shared this with me because I was in the same boat. I think 2 years ago I was paying $500 something for flood insurance because I wasn't in an area where it's required. My lender doesn't require it, but having grown up in Houston, I know that it's a safe bet and just a good thing to do. And then last year it was up to $600 something. This year it's $799.
$799, yeah.
And so I was like, oh, well then maybe I won't pay it. So I did call to check and say like, okay, well if somebody were just buying this home or starting a new policy, what would it be? And it's $849.
Oh yeah.
So I'm like, that's not that bad.
Yeah, you're close to the real rate, the new rate. So you're still under 4 digits.
See how all of a sudden they make us feel good about $849, right?
Yeah, I think my rate ended up being right around $800 this year, but again, it'll continue to increase until we get to $2,200.
So there's lots more information I want to talk to you about, but one thing, we're going to take a break. For example, when we come back, if people just can't afford it anymore. We know there are people who have to have it if your lender says you have to have it. But for the rest of the people, it seems like if we just say, I'm not doing it, then this whole rating system is not going to work.
Yeah, it's going to be crazy. So.
Yeah, we'll talk about that. We'll be right back. Yeah. Welcome back to Ask Amy. We are talking about flood insurance, and Leash Yu is dropping some knowledge, a lot of really good information. What we ended on is, okay, so pretty much everybody's flood insurance rates are going up. There were some areas that went down, but then I said, so if people like me, like other people who are not required to have it by your lender, if we just stop paying, then what happens?
Yeah, so FEMA's hope is that more people will jump onto the flood insurance program, so there's more premium to pay the claims that might come up in the worst areas. Mm-hmm. But what we're seeing is that people have definitely a threshold for paying for what they deem nothing.
Yeah.
And so when you buy a house and you're buying in Houston, you don't really know the area. Oh, you're going to buy flood insurance if it's $572 a year.
Yeah.
But if it's $2,200 a year, you're either going to make the decision, I'm not going to buy the house, or I'm not going to buy the flood insurance, or I'm going to just go ahead and buy the flood insurance. But we're seeing more and more people not buying flood insurance because it's just too expensive and they just don't see the value of it. And so it's kind of scary, but it's not your only option. FEMA's flood policy is not your only option. You can consider private flood if you want. Uh-huh. Right? So there's been a slurry of private insurance carriers that are coming in to try to satisfy the market and sell flood insurance at a lower rate. And sometimes you can get a better rate. Sometimes it's actually more expensive, but it's worth looking at. The buyer beware that I would give to the consumers out there is that FEMA's not going to go out of business. So if a hurricane comes in and wipes out the entire city of Houston and you have a FEMA flood policy, I think you're going to eventually get paid. If the same thing happens and you're insured with a private carrier and they're not real well capitalized, they could go out of business.
And then you get nothing.
You get nothing. So you paid all this premium and this carrier promises to pay, but they don't have enough money to pay you. And so these carriers, I don't have any reason to think that they're going to be out of business because they're very well capitalized, but it's something that the consumers should definitely think about.
But they're hit with a Katrina or a Harvey all at once. And yeah. I mean, that could happen. So that's good information. You just go ahead and get quotes for private and quotes. FEMA.
Yeah, you can strategize on what's best for you and your family.
Yeah, you had some really good takeaways on how people, you need to be knowledgeable with this new rating system. And so if you notice that your rates are going up every year and you want to know like, well, Like, what is it in the end? I mean, there's a way you can get this information.
Yeah. So what I would do if I were a consumer of flood insurance and you have flood insurance is I would call your broker and figure out your insurance broker and figure out how much is my endpoint. What's the true cost of flood insurance here? When is the pain going to end? And your insurance broker that you bought the flood insurance from should be able to give you that number. But definitely make sure you're paying your premiums. And by the way, don't send your premiums, your insurance. I wouldn't write a check and put it in the mail. I would always pay online, because we've had situations where people come into our office, write a check, we send it out into the outgoing mail, and the National Flood Insurance Program never gets it. And so, but they've paid the bill, kind of, but not really. So always pay it online if you can, because you get an immediate response.
Okay.
So make sure that doesn't cancel. And if you're buying or selling a house, if you're buying a house, you should ask the person that's selling the house whether they can assume their flood policy. FEMA allows you, it's the only policy that I know of that is transferable, but FEMA allows you to transfer a policy from one owner to another.
Okay.
And there's no obligation for the insurance company, the person selling the home, or the insurance agent to process the paperwork to transfer it. But you should always ask the seller of the home, if you're buying it, hey, do you have a flood insurance policy? Can I assume it? Because you can prolong the pain. You can get their rate today, pay 18% until it ratchets up to the new rate, but you could save thousands of dollars over the years if it goes from $572 to $2,200 like my house.
Right. So yeah. So for example, if you were buying Yu's house, Leash's house, and right now it's whatever, like $600 something or $700 something, and you didn't ask him that, like you just bought his house, you forgot to ask about flood insurance. As soon as you move in and you want to get flood insurance, it's $2,200.
Yeah, you could have saved a lot of money if you allowed me just to transfer it to you. So consider that. And if you're selling your house, ask your broker, can I transfer this policy? If so, we'll put this in the sales material and we'll allow the buyers to transfer, to assume it.
Yeah.
So it's a really, really good tool.
That is really good information. And then when you talked about calling a broker to find out sort of what's the end point. So I guess another way to word that, the broker should know what you're talking about, but you could just say, if I were to start a new policy, or if I didn't have a policy.
Yeah, just call an insurance broker and just tell them, hey, I need a flood insurance quote on my house. Well, you have a flood insurance quote. Yeah, I just need a new flood insurance quote. Yeah, but yeah.
Okay, yeah, that's exactly what I did too. And they're like, no, it's this. And that's how I found that mine wasn't that much of an increase. Yeah, so
the heights 77008 and 07 got really only like a 30% increase. So it wasn't that bad. Actually, it was a 130% increase. So it wasn't that bad. But like the Woodland Heights 77009, they were the highest in the area. They got hammered at like 250%.
Which is really interesting, because it's like a mile away.
Yeah, and most of the Heights elevated homes at the highest point in Houston. So you would think that the area would actually experience lower rates, but no, it was very strange.
So that one, on average, the average increase in that zip code 77009 you looked at was what?
249%, almost 250% on the houses that we did. And so again, we're continuing to do rate quotes there, and that number is sticking. It's just crazy. Yeah,
that is crazy. Galveston was really interesting in your study, because obviously, if you think I'm going to have a house in Galveston, you realize that it's very risky because it's on the beach, on the water. Yeah, so
Galveston was the shiny star. They were the only area that we did that actually had a decrease, and that decrease was like 41%. But one of our clients, he was paying almost $11,000 a year for flood insurance, and after this happened, his rate went down to $1,400-ish dollars. I mean, it was a crazy. So coastal property, frontline property. It was raised on stilts, but it was a $2 million house. And you would think that they get all of the closest to the water, erosion, high frequency of flooding, but they got a decrease, and not just a small decrease, a humongous decrease. Yeah. And they're paying less than me in West Yu, and I don't think I'll ever flood.
Yeah. So in the history of your property, it hasn't flooded. You're not in a high-risk area, but yet you are supposed to be paying more than somebody that lives on the water in Galveston.
Yeah, in a $2 million house on Galveston.
I mean, and to that end, it doesn't make sense with the whole, it's a $2 million house, so you would think that FEMA would say, oh, they can afford to pay more. But it's like almost like they got this break because they have flooded before, or because it's a...
Well, that house, it was brand new. It never flooded.
Okay.
And so it was very strange. The
Yeah.
whole thing is strange. There's no real rhyme or reason, but the bottom line is call your broker and figure out what the end point is.
Mm-hmm.
And then, you could figure out how much, when the pain will stop for your flood insurance.
Yeah. For example, because, for somebody like me, if you don't have to have insurance and you've called and you realize that it's set at $849, then maybe I would risk it this year.
Yeah.
Yeah, maybe. We'll see. Hey, we want to make sure that you know how to get in touch with Leash Yu because you've got a lot of great information. We'll put contact information for your agency in the show notes. Thank you so much for coming on and talking with us
Thank
today.
you for having me. I really appreciate it. I hope this is helpful.
Yes, absolutely. Hurricane season is here, so make sure if you're going to get flood insurance that you do it soon. Have a great day.
Bye-bye.